Hey guys, it's a market update. We have basically met resistance now for the Bitcoin price. So where do we go from here? We're going to be talking about the Fed raising interest rates yesterday, but the fact that they're probably done now and how the market is going to react to that as well. So I'll leave timestamps for everything below. Looking at the Bitcoin price now then and how it reacted to yesterday, the Fed raised by 25 basis points. But everything that Jerome was saying in the press conference, he actually seemed quite sheepish. He obviously understands, and I want to go over a quote of his that he said yesterday, is essentially that he now feels that with a banking crisis, credit creation will go through a massive contraction, and that has a feed through to inflation and employment, as in higher unemployment, GDP growth, etc. Everything that they've been trying to do by slowing the economy, raising unemployment, and slowing credit creation, that's now happening because of this banking crisis. And so you can see there was a realization where, yeah, they raised 25 basis points, but everything he was saying is essentially, we don't have to do the work now because the market is going to do it with the banking crisis. And so you can feed through to that. We just have to see that come out in the economic figures now, and the Fed are basically done. Now, that's dovish from the Fed, but not exactly bullish for markets. A recession isn't a bull case for markets. So that's different from the stock market and BTC. So we have to differentiate the two, and I've got some data here. As for BTC, we are right at a major resistance level. And so I do expect to see some weakness or some profit taking at this level for right now. So let's go over this. As you can see, this level at 30,000 is absolutely major in terms of the last few years of price action. And so we have to expect that we're going to meet some resistance here because this is a massive level at 30K. So we'll probably be under this for a while, maybe even trying to retrace. But to be honest, if the Fed keeps, on the Treasury keeps kind of pumping money into the market, then you may not see too many large retraces here. But this 30K has been support to the downside on 2 retraces back in 2021. And then on the downside, when we were going through the bear market, you know, it was a massive support level as well. We eventually broke this when BlockFi, Celsius, etc. blew up, and then the FTX right here. But you can see we've recovered this whole thing. Now, if you're a technical analyst as well, this looks to me like an inverse head and shoulders pattern, this entire pattern right here. So you have the shoulder here, you have the head, and then the shoulder. However you want to draw it, you can draw it like this as well. So technical analysts would say that a head and shoulders pattern, you actually trade the neckline of the pattern, which would be about this length. Now, this is not a day trade right here. Obviously, this is over maybe 6 months, but you're looking at a price target of like 32,000. That's just on the technical side. On a more fundamental basis and price action basis, 30K is the level, right? And we can very clearly see that. Once we break through this, and I suspect we will at some point, you know, you want to see that 30K acting as support to actually go and maybe test some of these higher levels. But for right now, 30K has to be a resistance zone because it's such an important price level. And we're just going to look at the market to see, you know, is the banking crisis going to continue, or have they kind of nipped it in the bud? I believe it's going to continue for the most part because small regional banks are just going to see more and more outflows, which is not bullish for markets. But obviously with that comes a huge credit crunch and a tightening, which is in turn going to mean, you know, more easing from government. So if we just look through this period, obviously I think that's a bull case for BTC personally. We will have to go through some chop though, because we'll look at some data right now. You know, when a recession hits, it's not bullish for markets in general. And so Bitcoin's going to have those two forces, pushing and pulling. If you are a trader though, check the link in description to Bybit. You can get a deposit bonus up to $4,000 via that link. So check that down in the description. If we take a closer look at the long-term trend for BTC, this is the chart I always come back to for, you know, long-term investing, or just seeing where are we in the Bitcoin cycle and the economic cycle. Right now, we are just completely on track and normal for every other cycle. So as you can see, we've got the halving coming up next year. That is a big event. And if you look through to next year, what do we have? We have a halving. We have in 6 to 12 months time, there is no doubt in my mind that conditions will be a lot easier. governments, especially the Fed, will be trying to reduce rates and also stimulate the economy through credit creation, QE under a different name, whatever they want to call it, it's just semantics. They're pumping liquidity into the banking system. That's good for BTC price, all else being equal. We're right here in the yellow zone, which is still a buy zone for me. We have the drawdown from the all-time high. You can go back and see all of the different cycles here. Every time we get a drawdown from the high, we come back into the log regression, 2 standard deviations under, which is right here, which we hit at about 15, 16,000. We have rallied extremely positively from that, actually more than I would have thought so, but the banking crisis has taken us here. Obviously, we're in this zone for me under 30k, 32k as my analysis around that. This is still the accumulation zone for me before the halving and top into a new all-time high if we go at the same rate as other halvings. But we can see we're just exactly the same as other halving cycles where we get the bounce off of the log regression. And so we're going right into this zone. Taking long positions above 32, 33, you might get stuck in that trade a little bit if we get the recession come in and a lot of uncertainty in market, maybe a sell-off. But again, like I said, medium term, any weakness in credit creation, a contraction of the economy is just going to be met with more easing from governments. We know that's going to happen, and so medium term, very happy. Just short term, be careful because we are coming into resistance here. So we could have a little pullbacks. We could break through it with this huge candle and then maybe have more pullbacks. So a difficult market to trade, but there are opportunities here. The narrative has shifted though from the Fed needing to do the work to slow the economy to now the banking system doing all of the work and the Fed actually saying, hey guys, you're going too far and we need to ease, right? So we're in that transition phase of the Fed destroying everything, now it's destroyed, and them having to say, actually, you need to support it again. So I feel like we're in that transition period now, and it doesn't play out week by week, it just plays out in these zones of banking crisis. Then the economic data will come in. Then the Fed has to start saying, well, no, we're really, strong about inflation, but then inflation starts to fall off a cliff because credit creation has basically gone to zero from the regional banks, right, in the States. That filters through other markets. So I think we're in this transition phase. The bond market is starting to price this in as well. You can see the yield curve has flattened a lot here. So this short rate around the 2-year was around 5%. You can see that right here. We got right up to about 5%. We've come crashing off that now. This right here was when Bitcoin went through a bear market, and now we've topped, in my opinion, and we're coming the other way as banks contract their credit and we see this recession. So as we see, Bitcoin is not the stock market. The stock market may crash during a recession, but at some point, the Fed steps in as well. They've kind of already done that. They've already put $300 billion worth of liquidity into the system. They've already stepped in. So I think looking for massive dumps in the price of BTC is probably not going to happen because they've already stepped in. They've already tried to boost the price of treasuries. So prices of treasuries are going up now, the yield down, because they need the collateral in the system to have a higher price so that all these banks don't go insolvent and the whole thing collapses. So for me, the Fed have already stepped in, and it's going to be a very rocky and volatile road once we see the data flowing through. But you can see this is starting to price in basically lower rates for the front end, pricing in a recession that's happening immediately and not 6 months, 1 year in the future now. So I believe this will continue to come down if the data plays ball, which the Fed and Jerome Powell yesterday said he expects now. He said, yes, we're going to raise rates if inflation keeps out of control, but he said, I expect that credit creation will contract, and that usually feeds through to lower inflation, lower growth, lower GDP growth, and slightly higher unemployment, which is everything that he wanted. So what he wanted, a complete collapse, has happened. And so we're going to see this priced in. But of course, it takes time for the data to come out and actually for that thesis to be proven right. How does that also affect Bitcoin and crypto as well? Bitcoin is not the stock market. It certainly isn't the Dow Jones. The Dow Jones has outperformed during Bitcoin's bear market. And when the stock market is going through more of a bear market or a potential worry about earnings, Bitcoin doesn't have to do that. and it's going to actually trade much more on liquidity, banking uncertainty, and also lower interest rates that are going to be coming. That is positive for BTC. The recession is going to obviously take some of that edge away, but that's going to pass. We know what comes after that: lower rates, liquidity, and debasement of currency, which pushes up asset prices again. Bonds going up in value, yield going down, Bitcoin going up in value. That's the longer term thesis that I'm playing for anyway. Bybit link in description to a deposit bonus if you are a trader. Check out the details via that link below. Check out the Crypto Investor course as well, where we talk about this stuff every day, over 300 videos, and also private Discord groups in there. Link below for that as well. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.